Okay, everybody. It's about 10 minutes before 8 o'clock Eastern Standard Time, and I was tracking this pennant pattern earlier today, and you can see that the market has now pinched its way out of here into the London session. I think we've got a good formation up here. We've got good resistance at this point. We've got some good support at this point. I think, and also good resistance right here. So I really think that this is building some good trend continuation patterns. Because the market is up high, it's at this 15-year high, I'm going to be looking to take a short trade if the market breaches this level. But keep in mind that because the momentum is so strong to the upside, that you've got to be ready for the market to whip around, meaning just barely break below this low here and then come back inside. You've got to be ready for that. I think, however, if the market does manage to break above here, that we're easily going to challenge these highs. If the highs break, then, of course, it's off to the races again. So I'm looking to take long trades here above 2.0313. I'm using a standard 30 pip stop. Short below 2.0267, again 30 pip stop. I'm not going to give the short side very much room at all. This 30 pip stop on both of these is really more to help if a big spike of momentum comes in very, very quickly. But especially on the short side, I want to be watching that like a hawk to make sure that the market doesn't get out of whack back to the upside. Now, a couple of things to take a look at. I don't know if I talked about this yesterday, but there is a new resistance line running from these two highs coming down that I am tracking. This earlier trend line here, you can see the market is obviously broken out above that. And of course, we've got our trading lane, which it seems like I've been talking about for an eternity now. Actually, since the market took off here, I was anticipating this trading lane, but really it's been going in earnest for the last 4 or 5 months or so. So watch out for the momentum. Again, we're at this all-time high. I think you're going to see volatility pick up, especially because we're into the summer months. Traders tend to be the head traders tend to leave the markets. Traders in Europe are going on holiday, so you just have to be ready for a market that doesn't have the same number of participants in it. The next point down, if the market really does get going, I think is going to be about 20137, right at this high here, and then below there, of course, is going to be this pair of highs, which is below 200 or below $2 at 98.36. So I think in either case, you've got to be ready for these positions to make a good run for it. Remember, based on the 15-year history, the next stopping point for the upside isn't until about 2.0650. So there's quite a bit of ways here. You see just about 400 pips to the upside if the market really starts going. So you just have to be ready to capitalize on that.